So today we're going to look at capital gains tax trap and the ways of reducing your tax liability. So we get lots of questions about CGT. So we've tried to answer the main ones here. And the reason that it's such a hot topic at the moment is because as the CGT net widens, more people are being dragged in or they're paying more. So in the final quarter of 2024, over £8 million was paid in CGT, which is up 60% in 1 year. So let's start by looking at the rates of allowances. The tax-free allowance has fallen dramatically. In 2022-23 tax year, the annual exemption was £12,300, but the following year it was cut to £6,000, and now it's just £3,000. So extra people face paying more of this type of tax, and some people are being exposed to it for the very first time. And meanwhile, the autumn budget increased the rates on stocks and shares and other non-property assets from 20% to 24% for high rate taxpayers and from 10% to 18% for basic rate taxpayers. So are there any CGT giveaways? Well, the short answer is no. If you give away assets to anyone other than a spouse or partner, that gift will be assessed for CGT purposes, and there will be a tax liability if that gain is over £3,000. If it's given to a spouse or civil partner, there is no tax on the transfer, but when they come to sell it, their gain will be calculated from the date it was acquired. Similarly, those who try to get around CGT by selling something for less than it's worth, such as a second property, then they'll find that the tax is due on the full market value. So the CGT net is widening, and this means that more assets will fall into the CGT regime. For example, the rise in the value of crypto assets means that selling them, swapping them for another type of crypto asset, or even spending them can incur a CGT bill. CGT may also be available on internet sales, like from eBay, where something's valued at over £6,000 makes a gain of more than £3,000. So this includes things like jewellery, paintings, antiques, that type of thing. So how about reporting and payment for CGT? Well, for non-residential property disposals, these can be reported on the self-assessment tax return or via the real-time return if you're not required to submit a tax return. Payment of CGT is due by the 31st of January following the tax year of the disposal. So CGT on residential disposals must be reported as a best estimate payment of account made within 60 days of completion of the sale. So more importantly, are there any CGT reliefs? Well, business asset disposal relief may be available on the first £1 million gains from the disposal of certain businesses during an individual's lifetime. Qualifying gains are taxed at 14% rate of tax. An individual's or married couple's only or main residence is generally exempt from CGT under a relief known as private residence relief. However, there must be a clear evidence of occupation as a main residence and not just ownership. And there are other reliefs like business asset rollover relief, which enables the gain of a business asset to be deferred until a point in the future. Business asset gift relief, which allows the gain on the business assets that are given away to be held over until the assets are disposed of by the donee. And of course, any unused allowable losses from previous years, which can be brought forward in order to reduce any gains. So it is a complex area, and you're not expected to know what you're doing. But if you feel stuck, or if you need a bit of clarity, or you want a tax planning meeting, then just get in touch and we're always happy to chat. Thanks, bye.